Here we go. All right. Good afternoon, everybody. Can you all hear me? Okay. If you can hear me, just type in a Y in the question box. Okay. If you have any questions, just feel free to ask them. And if you can hear me, okay, just say so. Thank you, Edwin. All right. So here we go. I am going to get started now. I am no expert on the Heiken Ashi stuff, but I am going to show you. I just created something that was kind of cool. I think it was kind of cool anyway. The way the Heiken Ashi works is to really help you identify trends. You know, it's not going to help you pick pinpoint entries or anything like that, but it's to help you identify trends. Right? It gets rid of the noise and all that. I suppose I should say before I get too far into this. Let me say this before I get too far into it. Welcome. Today's the 18th day of June 2024. This right here is what we're doing. The Heiken Ashi versus range bar with the TV Trades MTT webinar registration here, all that stuff. If you're in here and you haven't taken a free trial with us, you should really go here. You can do it right here. Just scroll down from the home page right here. The free trial is, it's dirt cheap. $25 to get started. I mean, the trial really is free for 3 days. If you don't like it after 3 days, just tell me. I'll cancel it. You can do the $25 thing, or you can upgrade to the $90 thing for a month. It's 10% discount, I guess. Yeah, 10% discount if you do the monthly, and it's almost a 20% discount if you do the annual. You can start out wherever you want. All right, they're all, well, except the annual. They're all free to start out with. All right. Now, charts. So I created this thing. The Heiken Ashi is based upon the combination of the midpoint of the prior bar with it's combined with the open, high, low, close of the current bar. So it's the midpoint of the prior bar combined with the open, high, low, close of the prior bar. So, everything that I do up here with the TV trades is just based upon the close. It's based upon the close of the prior bar. Okay? It's all based upon the close. There are some things out there that do things based on the open, high, low, close divided by 4, and some things that do just on the open, high, low divided by 3, or the high, low, close divided by 3. The norm is to use just the close, and that's what I did with all of this stuff with TV trades. However, just a few minutes ago, I was super creative, and I don't know if it's even going to show up down here. It's not going to be in Trading Panel, it'll be in Pine Editor. Let me see if I go to open my script. It did. Look at that, right there. I created this thing that I'm going to stick it up here. Well, actually, I may... Yeah, I'll stick it up there. I created this thing. I'm going to hit Add to Chart. It is all the regular TV trades math, but it's based on the Heiken Ashi formula. Okay, the Heiken Ashi formula. And this is really the first time I'm really getting a good look at this either. I mean, with you right now. But the Heiken Ashi formula, I explained to you what it is, right? Does anybody have any questions at this point? I don't want to lose you this early in it. But it's, the Heiken Ashi bars are they're there to help you define trends, right? To help you define trends. And to help you identify when the trend is starting to change, okay? Now, when you're in a good trend in a Heiken Ashi trend, you're only going to have wicks on one side of the bar. When you start to get wicks on the other side of the bar, that's when the trend is starting to change. All right, you're in a good trend when you only have wicks on one side of the bar, and then you get a wick on the other side, the trend is starting to change. All right, the formula for the Heiken Ashi bar goes something like the midpoint of the prior bar combined with the open, high, low, close of the current bar. So if you do all that and divide it by 5, then you come up with this formula that I used. Instead of using the close to determine where things should trigger, I used that formula. And so we're looking at it together here for the first time just to see what it does. I mean, here on the 15 range NQ with, I think I just have the longs on. I have the longs and shorts on, okay? With the longs and shorts on, no mid-trend trades. It's picking off the trades pretty good, it looks like, right? With the formula that I use, for the TV trades, it's picking off the trends pretty good using the Heiken Ashi formula. That is pretty darn good. It's something to consider, isn't it? It doesn't look like it does very much with the short side, but I don't think I don't have the bias on. All right. Well, that is interesting. I wonder what it's going to take to get it to create a short. Let's go on a 7 range and see. Hang on, it's got a lot to figure out here. This is the NQ, so the 7 range. No, it doesn't seem to be doing anything on the short side. Interesting. Well, that is certainly something worth looking into, because every one of these looks like it's picking off. It's either gonna be right away, or it's gonna be wrong right away. But the right away seems to be going pretty well. Anyway, I was wondering if you use that same formula and you apply that same formula to where you would normally just use the close. If we're just throwing on our regular TV trades, we have all these things in here where we have the midpoint on this. I think, do I have everything? I have everything going on this. I even have the bias level on. This just uses the close. It just works off the close. And you can see there are some places here where it did not trigger. It did not trigger on the color change. See where the Heiken Ashi is going to. It looked like the Heiken Ashi was going to trigger on every single color change. I am going to have to look into that. There's something to it. Anyway. So when you're using the Heiken Ashi candles like this, right? It helps you identify the trend. And it helps you identify when the trend is going to change. Like right in here, we have wicks on both sides of the candles. You know you're in indecision. Anytime you have wicks on both sides of the candles, you know you're in indecision. A good strong trend, you only have wicks on one side of the candle. Alright? If you don't have wicks for an extended period of time on both sides of the candle, you're in a weak trend. Now, it does not help you at all to find specific entries. Right? To find really precise entries, it doesn't help you at all with that. What it does help you is know when to start trailing your stop really close. Okay. I don't have a whole bunch to go over with Heiken Ashi stuff because it's not something that you can use for precision entries. I mean, you can throw a simple moving average on there if you want to. If we go in here, we just throw a technical simple moving average. And you're going to want it to be kind of close to. You're going to want it to be a smaller moving average like this one is going to be a 9. You're going to want it to be something like that. Because by the time it gets down below that moving average, the trend is likely to be just about done. Alright, because you're going to start getting wicks on both sides again. So it's got to be a really small moving average if you're going to use a moving average for this sort of thing. Again, the Heiken Ashi stuff, you can't really do the Heiken Ashi all by itself. It's not a thing to do all by itself. It's a thing to help you establish trend and to see when the trend is starting to end. If you get wicks on both sides of the candles like that, you know the trend is getting weak and it's probably going to end. Whereas with our stuff, this is just awesome, and you can see that it just stops giving you trades when the trend is going to end. Now, I want to throw this on a Heiken Ashi candle too, because it does work if you put it on a Heiken Ashi candle. You see, you still get the same stuff, you just get a lot fewer of them. Like, this was the 17th. This was yesterday. It gave a long trade yesterday. It gave a mid-trend trade there and there yesterday, and actually, is this today? Yeah, I guess it gave just one mid-trend trade today, but it gave 2 trades yesterday, and nothing the day before, and very few trades before that. So, I mean, I know I'm only 11 minutes into this, but does anybody have any questions? I feel like, hang on, I want to see, I see there's a whole bunch of people in here, but I want to see all the questions, and I feel like I'm not seeing all the questions. There you go, John. Will I be sharing this new TV3 Heiken Ashi version indicator with us later this week? I don't know. This is brand new. This is brand new to me too. I just thought of it, 30 minutes ago. I was like, hey, I was looking at the formula for the the formula for the Heiken Ashi, and I was thinking, nothing that I do is based on that formula. So why don't I just try to create something and see if how that formula holds. Hang on, let me just shut that off. Yeah, okay, we'll put it back on. And it does look like every time it gets a bullish color change, it only seems to work on the bullish side for some reason. It doesn't seem to be giving us any shorts. But, what's it look like on a stock, like NVIDIA? NVDA. I don't know. Let's look at NVIDIA. Because, with most equities, you're only going to be looking at longs, right? So, well, it looks like it's nailing pretty much every one. Sometimes the best things are found by accident. Alright. I don't want to go too far down that road. Yeah, after I figure out how to work shorts with it. But I mean, the longs are killing it right here. But I don't want to go too far down that road. That was just something I just thought about, and when I think about things, that's when I just get creative. All right, so let's look in here. The regular stuff, the regular TV trade stuff. For those of you guys who are new in here, there's a bunch of people in here right now, and some people are brand new, some people are not. Like Sue G, you are brand new. I don't want to. Nobody can see you, Sue, and I don't think you guys can see each other either. But anyway, if you have any questions, just type them into the question box. Okay. If you have questions, just type them into the question box. And what I want to do at this juncture is just go over some of the things. Well, I go over the TV trades to begin with, because if you're brand new in here, then you don't know anything about the TV trades. So let me just start out. The TV trades was originally designed for equities, for stocks. It was not originally designed for futures. But I know the majority of you guys, that have been following me for 10, 15, 20 years, know that futures is what I do every single day. And it works great with futures too. But here it is with NVIDIA on a 30-minute chart. All right. Now, if you're going to use it on minute charts, your risk is going to be a little bit bigger. I think for some reason I took the table off of this. I think I was, here it is. I took the table off. All right. With NVIDIA, there's only one pivot above where we currently are, so there's only one target above. I created it for equities. All right. With equities, for the most part, most people are just going to be buying. They're not going to be worrying about the sell side of things. So in here, you could just shut the sell side off. You wouldn't really need to enable the bias level either, because the bias level is to help reduce the number of places where you'd have buys and sells right next to each other, because the market's flat. If the market's flat, you shouldn't really be getting any indications at all. Let me go through that again really quick. Right, you know what? Let me start over, because there's a lot more people in here now than there was right at the very beginning. I'm not going to start all the way over. But if you haven't taken the free trial, go here to the home page at targetviewtrades.com. Take the free trial right down here. All right, it's $25 to get started. There is a 3-day trial. So if in those 3 days you decide you don't want it, just tell me and I'll cancel it for you. You won't pay a cent. If you do like it, it's cheaper to do it by the month. It's even cheaper to do it by the year. But you can start out for $25. It's like, it's like half a tank of gas, and it could change your life. It's not even half a tank of gas for me. But anyway, it's a pizza there. You can look at it that way. So in here, let me just go through these things fairly quickly. The things in here by default. Let me just take it off. Here, I'll take it off, and I'll throw a TV trades on by default. Come in here to invite only when you sign up and you give me your TradingView login ID. I gotta say all this stuff right at the beginning, because, well, some people don't know. If you're gonna trade futures, if you're just gonna trade stocks, then with TradingView you don't need to sign up for any extra data. All right. But if you're gonna trade futures, you do. You need to go in here to this. Go here to I think it's accounts and billing. Hang on, let me save on this. and go here to accounts and billing, and in here there's one thing you need to pay for down here. It's $7 a month right here. If you're going to trade futures, you need to pay for that. Right? It's $7 a month. If you're not using that, then you're not using real-time data, and you're not going to have the same results I have for sure. Okay, you got to do that if you're trading futures. If you're trading stocks, you don't necessarily need to do that. Okay. Now, I did design this originally for stocks, so let's just go through the stuff. When you first put TV trades on, you're gonna have to give me this thing right here. You see how mine says logged in as TV trades? You're gonna have to get one of those, logged in as something, and give me that ID, whatever that is. All right. And then inside here under indicators, you'll have an invite only section. Click on that. I have a whole bunch of things in here, but you'll just have TV trades. You'll have this one right here. Click on that one time. Okay, and that's going to put it on your chart for you. Now, by default, you don't need to change a thing. You're all set for stocks. Look, by default. It's perfect, right? Puts it on, gives you the blue arrows where you should have blue arrows. On the time frame, this is a 30-minute, but whatever time frame you put it on, it's going to have everything all set up for long trades. Just your basic long trades to begin with. Okay, long trades are buys. Just to begin with, on whatever you put it on. It's like, this is NVIDIA, but you could put it on whatever. Bitcoin. You know, you put it on Bitcoin. Bitcoin's not going to look good there, but if we do Bitcoin on like a 30-minute, we'll do it on a 30-minute. You can throw it on, whatever you want. It's going to come up with, good long entries right at the beginning. Okay, that's the default. Now, those of you guys that like to trade futures, we'll just go with the NQ. You can put it on futures. You can put it on futures on a 30-minute too if you want. See, it nailed it right here. You can put it on futures on a 30-minute if you want. There was one fella who sent something to me the other day, and he said, it was too fast for him. Well, I mean, too fast is relative, right? If you put it on a 7-tick range on an NQ, it's going to be too fast for me. But if you put it on a 30-minute, I mean, 30 minutes is 30 minutes, whether you live in, I don't know, anywhere. Whether you live in Africa, Russia, anywhere. Or you live here. 30 minutes is 30 minutes. That's pretty consistent around the world. It's up to you what time frame you want to use it on, right? It doesn't matter. It works on all of them. What if we need to pause for a month or two for vacations? Well, just tell me. Okay? And you can use it while you're on vacation, by the way. It's browser based. You can do it on your phone. Alright, so this is what it's like by default. Now, if you wanted to see shorts, now with the futures, the shorts are like a requirement. You got to have shorts with futures, right? And this is still on a 30-minute. With futures, you probably wouldn't do it on a 30-minute, at least not enter trades on the 30-minute. You could get a bias from the 30-minute, but you wouldn't be entering trades on the 30-minute. You could, but you'd have to have a big stop. And it would give you all that information. Give you all the information for the stop. Your stop right here, this last long trade, or the last short trade right here, your stop would be 37 points. Which, I know, in the scheme of things, is less than $800 for the stop. And your first target is right here, 2158. So, if the entry was 2188, then you got your first target's only 30 points away. So you're going to have a 37 stop for a 30 target. By default, it doesn't have the risk reward on here. You can put that on right here. Show risk reward. You want that number to be greater than 1. This one's going to be a little less than 1. You want that number to be greater than 1. Like this one over here, if we hit replay on this, and we go back to it's like let me do replay because we have the Heiken Ashi bars on. But if we were to go back here, then your risk reward would be better back here. Alright. But you can see this is what it looks like, and this is with the Heiken Ashi bars on. If you take the Heiken Ashi bars off, it's going to have these triggers in about the same places, but there'll be more of them, and they'll be more precise. Okay, like this right here is much more precise. Your stop's not near as big. In this case right here, your long entry, your risk reward is 0.02 because your initial target number 1, you only have one target. And the initial target was like right up above it. So your entry was right here, your initial target is right there. So that's why it's so tiny. Because at the time, there was nothing above it. We're at all-time highs. But I was going through these things one at a time. The risk reward, you want that number to be greater than 1, all right, when you take a trade. And what that is, I'll just describe it to you. What it is it takes the difference between the entry and the stop, and the difference between the entry and the first target, and it divides them, right? It's actually the entry between, the difference between the entry and the first target divided by the entry and the stop. You want that to be greater than 1 or greater. All right, unless you're in a situation like this where you're at all-time highs and you just want to take a chance. Your stop in this case, when you have a blue arrow right here, the mid-trend trade stops are generally smaller than these stops. These are the trend change type stops, like this, the red and the blue arrows. All right, your stop is the prior bar's low when that happens, or the prior bar is high if you go in the other way. That's what your stop is going to be. That's generally going to be bigger than the mid-trend trade stuff. If you put the mid-trend trades on, the stop on that just needs to be, these should happen on the pivot bars, okay? When you're doing a range bar particularly, they should happen on the pivot bars. So your stop just needs to be the swing low right before you. And if I do this on a range bar, we'll do it on a range bar and you'll see what I mean. You see, when you get a mid-trend trade like this one right here, your stop just needs to be above this bar, or above this bar, or below this bar, or below this bar, or below this bar. Okay, or above this bar. This one here would have stopped out. Right, above that bar. But that's how simple the mid-trend trades are. Your stop is generally smaller with the mid-trend trade because it's not looking at the bar before, it's looking at the current bar, the bar you're in. Alright, let me scroll up and see. John, I thought you followed that up with what if we have 2 vacations? Does this have a scanner part that shows what new entries are available? Hang on. i.e. stocks. It doesn't have a scanner mark. Is a signal to get out of the trade when the direction changes? Okay. I don't really give a signal to get out of the trade. Okay. Generally, you look at the targets, and once you've hit all the targets, you can put up to 5 targets. Once you've hit all the targets, you're going to be trailing your stop. That's how I do it. I trail my stop. I'm looking, generally I would be looking left to see where the next target should be, but this does it for you. This does all the looking left for you. And you can put the lines on the targets if you want to. Just do that, and it's going to draw the lines on the targets for you. Now that's going to draw the lines based upon the last blue arrow. So here's a target, here's a target, and there's a target. So Mark, I exit with a trailing stop almost always. Unless I see something good, some good reason for it to go to a level, then I'll put a target up there. Like yesterday, I was long yesterday afternoon. Is this yesterday afternoon? No, this is this afternoon. Yesterday, I was long around 1 o'clock in here. And this 20,200 level was happening. And I don't know where I was long. I think it was somewhere near. Was it on the 15 range? It must have been. And this 20,200 level was coming up. Was it 1 o'clock? Hang on, I'm looking at the wrong one. Yeah, it was right in here yesterday. Right in here. It was around 1 o'clock yesterday when I was long right through here. And I was looking at that 20,200 level. And, this was going pretty good. It was actually back here when I was looking at that level. And it was going pretty well. And I took that and I was in profit pretty good. I was in profit like 50 ticks or something like that. And, and I was looking at that level. And so I had put a target up there. But I didn't end up getting to that point. I ended up exiting with a trailing stop. So how you exit the trade is up to you. I generally exit with a trailing stop more often than with a target. But you can put the targets up here. That's why we have the targets. Because the targets are looking left to find those areas that it should go to for you. Okay. You see the blue and green up arrows. What is the difference? Okay. These are mid-trend trade. The green up arrows are mid-trend trades. Right? If we shut the mid-trend trade off, you're only going to have blue and red arrows. Alright, red arrows are down and blue arrows are up. They happen closer to the beginning of the trend. They don't happen in the middle of the trend. Okay, so one of the issues that people were having DS, one of the issues that people were having is they'd miss this blue arrow, and then they wouldn't get another blue arrow until all the way over here, right? So they'd only have time to get like this blue arrow, and then they'd miss that one, and then they wouldn't get another blue arrow. And if they were only going long, you know, if they had a bias to the long side for whatever reason, then they'd never get another trade. Or they miss this red arrow right here, and then there's no other arrows down until way over here. That was the issue that I was getting, and it's mostly from people who are trading futures, because if you're trading equities, you know, most of the time you're gonna be buying something and holding it. You're not gonna be day trading the equities. But so I created this mid-trend trade, and this was one of those things that I created. You'll see some of these don't have the little black arrows before them, and some of them do. The formula is just a little bit different for them, and the one with the little black arrows, I created that formula. I found that formula when I was looking for a formula to let you know that this was coming, to let you know a bar ahead of time that this was coming. I created the formula for that, and those are just awesome. So with this, the little black arrow, you get the little black arrow a bar ahead of time, and if you get a little black arrow, most of the time the bar right after that is going to be the trigger. Just so you know, the little black arrow is going to point down on an up close, and then the next bar is going to be the down close in this case. Or the little black arrow is going to point up on a down close, and the next bar is going to be an up close to be the trigger. Okay. But these, I mean, the mid-trend trades are really good. They're really good trades, and they happen again and again and again. And you know, you get into flat spots like this, your stop is going to be right down here. Think about this though: the mid-trend trade. It says it right in the word, mid-trend. You have to be in a trend. All right. If you get a trigger, like, let me find something that wasn't really in a good trend. Here. Okay. If you get something like this that doesn't really work out, and you get another one right after it, now that one right after it, a lot of times that second one's going to be okay. But if you get another one like this, don't take this one. All right, you're not in a trend. All right, it's looking. This is just looking at the information that it has available to it right here. But you can see right here that you did not continue the trend. So don't take that one. You know, that's going to happen sometimes. It doesn't happen very often, but it's going to happen sometimes. And you know, they're mid-trend trades. They're to happen in the middle of a trend. Okay. Another thing that I want to point out to you guys, and this is just the way that I'm doing it. You don't have to, but this is just the way that I'm doing it. If you get two of these black arrows, the trigger that comes after that is really high probability. Really high probability. Two of the black arrows, the one after it, almost always gives some good profit. I'm just saying that because the way that I'm doing it, I just double up on those. And you know, I've worked my way to that point, so I can do that. But I'm just saying, those are really, really high probability arrows. They don't happen all that often, but when they do, you know, it's worth not missing them. Alright, so the blue and the green arrows, that's the difference, DS. The green arrows are mid-trend trade arrows, and the stop is smaller on those. The blue arrows are really closer to the trend change, at the beginning of the trend. You're likely to get more of a run out of the blue arrow than you are out of the green arrow, and the stop is going to be a little bit bigger on the blue arrow usually. The stop is based upon the prior bar for the blue arrow. With the green arrow, the stop is usually based on the trigger bar, the bar that the arrow is pointing at. Okay. Higher time frame levels on lower time frame range charts is good bad places to deal from versus just the target lines only. Feel like maybe good for that, but yeah, that's. Did you see what Dwayne did today? He totally combined. He totally combined everything. Okay. How did I make the bars so thick? Are your bars always really thin? Mark. If they are, it's probably right here. It's setting right in here. You might have thin bars like that. Checked. So they're all thin no matter what you do. They're always thin. Okay. You go in here like this and uncheck that. Do not use phantom bars and do not use thin bars. Alright. then you just roll the little thing on your mouse to make them thicker. Okay. Oh, the arrows. You meant the arrows. How did I make the arrows thick? The arrows go along with the bars. I don't think I did anything special with the arrows. Yeah, what Dwayne did, I'll show you. I'll show you. He sent me this message. Hang on. Here. This one. He mixed everything up. He said that's what he's using. But, you know, however you apply it is up to you. You know, however you apply it is totally up to you. You know, the fact of the matter is it gives you really great entries. In any market, it gives you really great entries. And not every one is going to be a winner. So, you know, if you stop out, get ready for the next one. Because there's going to be a next one. And you got to let them run. You know, don't just get in there and take 2 or 3 ticks on these things. You got to let them run. Because a lot of times, especially the blue ones and the red ones, they're going to be at the beginning of a trend. Are your arrows not as thick as mine? I don't know that I made that a possibility to change in here. I didn't think I did. But in here we have the buy and sell, trend trades, labels. No, if it were anything in here, if it were going to be anything, it would be something. See, I didn't put any lines in here on purpose. If you had lines, then there's a setting in the line itself where you can choose the thickness of the line, but I don't want to have any lines on these charts. I don't want you guys to have any lines on these charts. Alright, so I'm still using this one. Now if I throw this Heikin one back on here, I'm curious because I really haven't looked at this with all the stuff on it. This is what it looks like with shorts and longs. What's it look like with no longs? Let's go. Yeah, something's up with that. Oh, there it goes. Okay, it took it a while to take them all off. So I'm curious what it takes to get a short. Hang on, let me do Alt and back and see if we come up with a short here anywhere. If you do Alt and hold the back arrow down, it does all this for you. Look, it just does not work on shorts. Okay. Well, clearly I have to do some work on that. The shorts do not work at all. So put the longs back on. Let's put the mid-trend trades on. Are yours thin like that? Is that how yours are, Mark? Is that what you mean? Thinner. I don't know. Okay, so if I put the mid-trend trades on, it should only give long mid-trend trades in here, if it's going to give any. Yeah, it did. Okay, so you should just have the green and the blue arrows. Yeah, they're working pretty well too, using that formula. I can figure out why it doesn't give any shorts though. But you see, every one of these at the beginning, it's, you know, the whole color change thing. If I have, let me just put the regular TV trades on down here, the same 15 range. Yeah, you see the whole background change is happening at a different place. And are the bars even the same, like a 944? Let me go all the way to the end. I'm curious. We're all discovering this together right now. Alright, so these bars look the same, don't they? They all look the same. And the background change looked like it happened in the same place. No, it didn't. Did it? Yeah, I guess we got that. And we have a blue one there. This one gave a mid-trend trade. This one didn't. You have a blue one there. This didn't give any shorts. It gave a long, where this one didn't give a long. Gave another long, where this one didn't give a long. Gave a short, where that one didn't give a short. Gave a long, where that one didn't give a long. So it's an interesting formula. I'll have to play with it some and see. I'll make it an option for you. Be an upsell. I'm just kidding. Just kidding. Adding the ability to resize the arrows and settings regardless of the chart zoom level would be a nice upgrade. I know, I'm not sure that I can do that. I'm not sure that I can. I think I tried to do that. This is like a... You know how I had to go to make this thing adjustable, to make this table adjustable, they gave me 9 different ways to do it. And, I have to go in here and you can do like center, right, and left, and top, bottom, center. I'm pretty sure that that's all you can do with these, like medium, small, and large. I think is all you can do with those. That's all they give me from a programming perspective. I'm pretty sure that's all they give me. I'm not even sure I can play with that. But I'll write it down as a request. Because more than one person just asked for it. So, arrow size. You're talking about width, right? All right. So, does anybody have any questions? Caller one. Let's tell the attendees is one person has called in. Does anybody have any questions about any of the stuff that I've just shown? Let me go to the question box again. That's a chat box. Nobody has chats anymore. The current arrows, they're whatever the default is. I don't know. I'd have to go and look. I'm pretty sure they're large. I don't know. I'll have to go look and see what it makes available, what it exposes as far as methods and parameters. All right. So, does anybody have any questions? Does anybody want to see any other markets? Anybody want to see anything other than futures, or anybody want to see like Bitcoin or anything like that? One of the things that some people, some of you may know, some of you may not know. I'm just looking at the list of people who are in here, and yeah, and almost everybody in here that's watching right now is already using it. So what I want to know is what you guys want. I mean, you said right now the width size of the arrow. If I can change that, that'll be a pretty. If I can do it, it'll be a pretty simple change because the actual code that puts the arrows on the chart is only a few lines of code. It's the stuff that that calculates the arrows. It's a whole bunch, but the actual thing that says put an arrow on the chart is pretty small. The original arrows that I had back in the day, the original versions were like this. They were these kind of arrows, and they were all down at the bottom or at the top. But then that didn't work with the lines when you put the lines on the chart, because the lines would be all over the place. They wouldn't stick to the place where they're supposed to be. So the ES today, crude on a 10 range, and the QQQ. Alright, so let's look at all those things. The ES on what time frame, Daryl? You were looking at it on a 4 range yesterday, right? When we talked last night. You're looking at it on a 4 range, so let's look at that on a 4 range today. That's what you're talking about, right? In a 30-minute, yes, I can. Yes, I can do all that. We'll do all this stuff. Okay, so here it is, the ES on a 4 range today. Now, I ran the 4 range this morning in that live thing that I did with YouTube, and it looked like from 9 o'clock. Well, I had this trigger here, but then I thought I had a couple other ones that were decent. Oh, I don't have the mid-trend trades, do I? Yeah, I do. I don't have the shorts on. That's what I don't have. And enable the bias level for futures. Okay, come on. Oh, and I got the Heiken one. Hang on, I gotta do it for this one. Show the shorts and enable the bias level. Okay. Sorry, I was doing it for the Heiken one. Oh, and now I gotta turn it on. There we go. this is what triggered right at the beginning. We had these double green ones right here, and then this one that would have stopped out. This one that would have stopped out. This one would have gotten some back. This one was okay. This one was okay. This one not okay. We had a couple right there in a row. Do I have the bias on? I don't know if I have the bias on. I do have the bias on. Oh, even with the bias on, we had a little bit of trouble right there at the 10:30 point. Other than that, all these are looking pretty good. Pretty good. Good enough. Yeah, there were a couple of trouble spots today where it didn't do so well. Right here at the end of the day, that was not so good. That one, this would have been okay right here because he stops up here. This one, it's kind of odd that it actually gave you a trigger here, but the stop would have been down here, so that would have ended up working out. This one just stops down here, so that would actually just stopped out eventually. What did you want to look at with that, Daryl? There were some spots today. It had rough spots where it right in here, right through here at 10:30 today. It did not go well there at 10:30. But leading up to it was pretty good. You know, and if you're just looking to get your couple of points a day, which I know that you are, if you missed all of this, well, then that kind of stunk because you got this one where you stopped out. And this one here you might have stopped out again, and then that would have been just enough to get them back. And this, a break even, this, a little profit, and then you get into the junk right here. So it depends what point you started at during the day. But overall, I mean, overall it was good on the 4 range. You want to look, Bruce wants to look at the 30-minute on the ES. So here's the 30-minute on the ES starting out today. Here it is. Alright, remember with these, your stop. Now, when it gives you this, it's going to put the stop down here at the prior bar low. Okay? That's the way it's going to work when you have these right here. It's going to be the prior bar low. So in all of these, it ended up working out so far today. There were only 2 trades, and they both worked out on the 30-minute today. I don't see it putting any shorts in here. Do I have the shorts on? Let me just make sure I do. Yeah, I do. It's, you know, the mid-trend trade, again, on a minute range or a minute bar, the mid-trend trade is going to be the pivot that you're working off of. In this case right here, it was right here. This was the pivot, so your stop would be right here. But as we go through here, like a mid-trend trade right here, I guess this would be your pivot here too because you had nothing before it. These right through here did not work out at all. This one right here worked out just fine. This one, your stop would have been the same as the prior bar right there, so your stop would have been right there. So what are we talking about here? What time of the day? I didn't even look. And this is, we're back to Monday the 3rd of June, so we're going back a couple of weeks now. And we're on the U contract, so none of that really mattered back there because the U contract wasn't even available. So let's put it on a different thing here. Let's do this. Put it on something that was available back there. Put it on the ES exclamation 1. Alright, that's the continuous contract. So now we can go back and look at different things. Like here, where it was available back here on the 12th. Your mid-trend trades and stuff like that. So it's giving good indications here. I mean, with the 30-minute, you know, it seems like the ones at the trend change point are the better trades. Okay, and that's the ES 30-minute. Let me scroll up and see pivot labels checked or not. The pivot labels are just going to show you if you want the pivot labels, Jim. If you check the pivot labels, let me just put them on for you so you can see. Draw pivot labels. It's going to put on the pivot labels here now. Once it does, I'll go to the end and I want to show you something else. Okay. This is the ES, and we're at all-time highs here on the ES. It's on a 30-minute. It's not going to let me blow this up. Let me shut that off and go here and blow it up. And let me bring it back to some place where we had short. Here it is. Okay. So we'll hit replay and bring it back here like this. Now the reason I was doing that is because if we put the target lines on, once this populates, if we put the target lines on, it's going to actually have some targets down below us because we're going into all-time high, so it's not going to have them. But if I put the target lines on like this, you'll see once they draw, there, once they draw, they're drawing from the last, well, these are drawing from, this one right here is drawing the lines down below it. It's drawing this one, and this one. Now the lines before it are from the last red short, but what it's looking at is looking back to these prior pivots right here. It's looking back at that one, and then the one before that is going to be back here somewhere. It's going to be way back here. This pivot right there, and then the next one will be the next pivot before that. So you don't need to have the pivot lines on there. Okay, you don't need to have the pivot lines checked, the pivot levels checked. But if you want to see where they are, you know, without having to manually look left and look at the number and all that, you can do that. They're gonna show you the pivots looking left for you. Okay. Let me undo the draw pivot labels now. The bias level, just so you know, the bias level is the equivalent of having a 233 simple moving average on the chart. And if you have the bias level checked, it's only going to show you longs above the 233, and it's only going to show you shorts below the 233. Now you know the problem that we all have is the stuff in between our ears, right? When we start to use that in situations where, you know, where you might, this is going to go out 5 bars to get rid of those extra 3 lines. There they go. Okay. See, after the extra 3, it's going to go out 5 bars and get rid of the prior set of lines. But if you had like a 233 moving average on here and you said, okay, well, it's saying to give a short here, but it's really close to the moving average. Anytime you say, well, it's really close, or maybe, anytime you say anything like that, you're dealing with maybes and you're guessing. So I don't put any indicators on the chart. If you want to have a bias, you can create a bias, but don't put stuff on the chart that's going to help, that's going to just enable you creating a whole bunch more biases. The whole idea is to just trust the system, take the trades, trust the system. It works well. No, trade it the way that it's designed to be traded. Put the stops where the stops are supposed to be. No, it's an easy system to use, and you know there are going to be times where you know it's gonna stop out a couple times in a row in opposite directions. There are going to be times like that. It's not going to be very often you'll stop out twice in a row in the same direction. It will happen, but it's not going to be very often that will happen. But Jim, that answers your question about the pivot labels. I want to Mark, you had asked about the QQQ, the SPY in a 5-minute. Bruce, that was a 30-minute ES. Are you good with the 30-minute ES? You want to look at the Heiken one on the 30-minute ES? It's only going to show longs. It doesn't look like it showed anything. Oh yeah, there they are. There they are. It's just showing long trades. It's interesting, isn't it? It only shows the long trades. I'm gonna have to look into that. There could be something to that formula that it only shows long trades. Only shows good long trades. So the formula was take the midpoint of the prior bar, open, high, low, close of the current bar, add it all together, divide it by 5, and then throw it into every other formula that I use. That was the formula. There's 127 different places that I use that. So, the next thing, QQQ or SPY on a 5-minute. Let's go to the 5-minute to begin with, and then we'll go to the QQQ to begin with. QQQ. Alright, so here we are on the QQQ 5-minute, and this should have everything going for it. It does. It's even got the bias level on. Okay, so the QQQ, giving some pretty good indications. Now, the thing about the QQQ is, what are you thinking of doing with the QQQ? Mark, are you buying options with that? Bruce, I'll explain that in just a second. Yes, options. Okay. Well, here's the deal. The QQQ, you might be better off taking, paying more attention to the red and the blue arrows because they're going to be closer to the beginning of the trend. If you get one and then you get a pivot, a mid-trend trade not too long after that, the ones at the beginning, at the color changes, are the ones that are closer to the beginning of the trend. The mid-trend trades are, they're good to enter if you miss the first one. They're good to enter on the second one, but I wouldn't say buy here and then, take a little bit of profit on an option, and then do it again here, and then do it again here. I'd say, keep looking left. In this case right here, what you had said earlier, Jim, about the pivot labels, if you can only look back, it will only look back 5 levels. But if you put the pivot labels on, you can look back a whole bunch, like 800 levels, I think. There's some number that it goes back to, that I set it to. But and look back and see all the pivot levels in here, or you can just put it on a larger time frame. Okay, but that's, it's great for the options, but I would focus more on the blues and the reds. Looking to buy puts when you got the reds, or selling calls when you got the reds, and looking to buy calls when you get the blues, or selling puts when you get the blues, or both. That's what I'd be looking more into. Okay. And Bruce, what does it mean when you have a color change like this one right here, but you don't have a change in you don't have an indicator? Well, on the range bar, now it's different on the range bar than it is right here, but on a range bar it's because you didn't get the close in the right direction. Right? On a range bar, that's what it is. And in here, there's a few things that have to happen for you to get the actual arrow, and they don't all come together. One of the things with the range bars, when I first created it, there were a few. I was trying to filter out the false signals, and there were more times where with a range bar, when you change colors, like let's put it on a range bar. There were more times with a range bar, come on, where if you had the color change and the bar closed in the wrong direction, like this one right here, if you had a color change but a down close, if you had a blue but a down close, more often than not, it resulted in a fail. Right? If you have a blue and down close, or if the bar before it doesn't close in the same direction, that's another thing. That's another thing that stops it. Okay, you got to have 2 bars in a row closing in the same direction to get an arrow with a color change, and they got to be going in the direction of the color change. You got to be 2 bars in a row going in the direction of the color change. That is one of the little. There's a bunch of little things that you see with price action that happen more often than not that help filter things out. That is one of them. Okay, Bruce. And the QQQ, the SPY. I didn't look at the QQQ. No, we did look at the QQQ. We didn't look at the SPY. And then the arrow disappears. Okay, Mark, sometimes you see an arrow, take a trade, and then the arrow disappears. How to avoid? Wait till the bar closes. Alright, if you're on like a minute-based chart, like a 30-minute chart, there will be times, like there could be, it could all come together. This right here, you see how it just printed the little green thing right there? That means this is almost a mid-trend trade. Did you see that? Right there at the bottom, watch. It's almost a mid-trend trade. See? There it is right there, the little green arrow. On a down tick, it prints a little green arrow. It's almost a mid-trend trade, but it's not a mid-trend trade until the bar closes. Okay? If this bar closes, obviously, if this bar closes lower than this level right here, it's going to say it's a mid-trend trade. But it's got to close lower than that level. For whatever the reason, I don't know exactly what the numbers are leading up to that, but the calculation is saying that. That's the math that's doing it. So that's why you gotta wait for the bar close. Okay. Show only arrow on bar close. Yeah. Well, I think so. I think so. In here, I think values and status line, visibility, ranges, defaults. I thought there was one that says only on bar close. No, there isn't one that says only on bar close. I thought there was a setting for that, only on bar close. It might be a bigger setting in here, maybe. Adjust for dividends, calculate bars based on previous close. I don't. There's something. I know there's one that says on a bar close. I don't know where it is though. But I know that that's what you got to do. You got to wait for it to close. When you're setting an alert, and I guess I should go into this with you guys. When you're setting an alert, first of all, if you want an alert that's got anything to do with shorts, or you want an alert that's got anything to do with the mid-trend trade, you have to make sure that whatever it is you want the alert to be on is set when you create the alert. Like if I want to do an alert on a mid-trend trade, and I come in here and I go in here and I set the alert, and I go in here and I use my TV trades, and I go in here and I set a mid-trend trade buy and a mid-trend trade sell and advanced notices and all that. I set all those things, and they're going to show up over here, but they're never ever going to trigger, because in here I don't have the mid-trend trades turned on, and it looks at that. Alright, so you got to make sure you have whatever it is you're going to set, make sure you have it turned on, and then you can come in here and set your alerts. Alright, you come in here and use the TV trades and come in here and set the alerts. Now, I did the mid-trend trade advanced notices. That's going to happen when you get the little black arrows most of the time. Alright, whenever you get a black arrow, it's going to happen. And, you know, the actual buy and the actual sell alert, mid-trend trade buy and sell alert. And these advanced notices right here, the buy and sell advanced notices, you get those when, let me show you. What am I on here? I'm on a 30-minute QQQ. Let me go to the 15 range QQQ. Okay, this right here, a red bar on a blue background is going to give you the advanced notice. A blue bar on a red background is going to give you the advanced notice. Even in the middle like this, it's going to give you an advanced notice. It's going to say long coming soon, or short coming soon is what that's going to say. Short coming soon. And then you get your mid-trend trade that triggers a decent long. That just happened right there. This is going to say short coming soon, and then that it probably did if I had it turned on. This is no, I don't have anything turned on for the QQQ. I don't have any alerts turned on for the QQQ. But anyway, that's where that stuff comes from. Is there a setting to show only the arrow and bar close? That's not really, there is a thing for that, but when you do the alerts, particularly when you do the alerts and you create an alert, do it only once per bar close. Alright, if you have any other setting in there, it can trigger when that thing's just showing on a minute-based bar or any time-based bar. When it shows that little green thing, it would trigger an alert. Every time it shows it would trigger an alert. Alright, so when you create your alerts, make sure you check, hang on, make sure you check once per bar close. Alright, and wait for the bar to close before you actually take the trade based on an arrow, because you don't know what's going to happen by the time that bar closes. That's why I use range bars, because you do know with range bars, but you don't know with the other types of bars. Okay. Alright. More questions, guys? It's now 4 o'clock. I guess I started 1 minute late, so we can go to 4:01. It's now 4:01. If you haven't taken a trial, go here to targetviewtrades.com. The trial is right here. Alright, it's right here. Take the trial right there. Now, One of the requests was maybe next week I'll mix up the time frames and look at different time frames, and you can do that. All right. I'm not sure I'm going to encourage that, but you can do that. Now, actually, Rico, he's not in here right now. He's usually in here on these Tuesdays. Is he? No, he's not in here today. He does that. He'll look at his 30-minute chart and he'll take things in the 30-minute direction. And that's what Dwayne was doing. He had 3 different time frames that I showed you there. But he had all the TIQ stuff from the morning session mixed in with the TV trade stuff. The TV trades is going to give you precise entries. And most of the time it's going to give you a warning ahead of time. Most of the time. Not always. Alright. You guys all set? You have anything else? If not, I hope you all have a great day off tomorrow. And we'll be back at it. I don't know when the markets actually open back up tomorrow night at 6 p.m. I don't know about that. I'm sure if they do, Joanne will be in there placing trades or putting out alerts or all that stuff. Again, if you haven't taken a trial, go here to targetviewtrades.com. Take the trial here. It's only $25 to sign up, and it's free to take the trial. Okay? Cheap. I made it cheap, so you can get in there and try it out, and if you don't like it, just tell me. I'll cancel it. Alright. This is easy stuff, guys. Easy stuff. You don't have to learn 100 different things. Don't complicate it. Alright? Do not complicate it. It's as easy as it looks. Alright? Okay. Thank you guys all for coming today. Hang on, was there another one? Leon, okay. You are welcome. You are welcome. Again, thank you all for coming today. Next week is going to be different. Just so you know, next week I'm going to be doing a thing with Online Trading Central or something like that. I'm going to be doing something on Tuesday next week, something different. So next week's meeting will probably not be on Tuesday. It'll probably be on Wednesday. Okay, just saying. That's it. I'm going to wrap it up. Thank you all for coming, and I will see you Thursday, I guess. Right? You all have my phone number, right? It's 617-943-3298. 617-943-3298. You all have my phone number. You can text me at that number if you have any questions. Okay? That's the best way to get a hold of me. Alright? Alright, guys. Thanks. We'll see you all soon. Enjoy your day off.